Hey, what's going on, Ant family? Welcome back to another daily analysis here with DTA, where we talk about AMP on a daily basis, talk about some things from a macro perspective, and also take a quick glance about what's happening with Bitcoin, since we all know that is pretty much the market benchmark for the entire cryptocurrency market. So, in today's daily analysis, is really going to be, sort of a macro one. So, we'll touch on what's going on with AMP and also what's happening with Bitcoin, and also, some things that are happening around the world. Right? We have some major concerns going on, and then we'll end it off taking a look at where we could possibly be in today's cycle. So, hopping right into it, looking at CoinGecko.com, taking a look at AMP's price for today. We are currently at the 0.041 mark, right? Bringing us to the lower levels of 4 cents. We're currently down 7.4%. And we've been floating in between this range of the lower 4 cents levels to the upper 0.047 level, right? So our range is getting a little bit lower, but we can see the range of the entire cryptocurrency market getting lower. So AMP is by no means any exception. So taking a look at Etherscan for the daily holders for AMP, we can see that we actually grew quite a bit. So despite the slight market downturn that we've been in, we've actually been getting new AMP holders on a daily basis. Yesterday, Sunday, July 18th, we had 27,474 holders. Today, July 19th, we have 27,562 holders. So, on a daily basis, we're getting at least 100 new AMP holders into the market. All right, so that's what we have happening with Etherscan. And hopping right into our daily analysis, starting off with the weekly, we can actually see that, last week, Sunday, we actually did try to close pretty close to the fib 786, right? If we zoom in, we can see that, we were pretty close to the line. If we measure that out, let's see how far percentage wise we were. So, I mean, guys, we're only 3% away, 3.45% away from closing right on the fib 786. But, unfortunately, we weren't able to do that. And, the start of today's weekly candle, we can see that the bears still do have control and they're pushing the market down slightly, right? So, there's a possibility that we could very much come down to our lower support levels, down to the 0.038 mark. And if that doesn't hold, then, it's very possible that we could come down to where we started this bull run from, or where we started this, this impulse from, right? Which will place us right back at 0.025. So that is something that I know a lot of folks probably don't want, especially, the people who bought at the top. But, this is just an opportunity to really lower your dollar cost average, right? A second buying opportunity, if you will. So that's what we have going on with with the weekly. Let's take a look at the daily and see what's happening. So, as you guys already know, this, bearish pennant, it did sort of play out, and we moved down to our lower levels, just measuring this move, right? And right now we can see that, we did get rejected at the fib 786. We tried to push up, but, the bulls didn't have enough momentum to do that. And we got rejected hard, guys. We got rejected hard. But I mean, from a macro perspective, right, the bears have really maintained control of AMP's market ever since June 17th, right? That will place us, a little over a month of the bears having control of the market. So, just being realistic and, evaluating what's happening. We did have a couple of days where, the bulls hopped in and they triggered a slight retrace, but, this retracement is really just a continuation in the market conditions that we're in right now, right? If it was a retracement during an uptrend, that would be healthy, as we can see right here. But since it's a retracement during a downtrend, that's not healthy in retrospect, right? That's letting us know that we're going to continue to, move to the downside. So, it looks like we have another retracement here. We got rejected hard. And, if this candle closes as a bearish engulf, then, I think that there's a strong possibility that we may continue to move down to our lower support levels of 0.038, and possibly down to 0.025. So that's what we have going on with the daily. Last but not least, looking at the 4 hour, right? This is where things get a little interesting. So on the 4 hour, right, we can see that we try to get above, our resistance line of 0.046 twice, once here and also once here. So this is known as a double top. Double tops are notoriously bearish, right? But, just taking a look at some of the other market conditions that we have, it also looks like we could be putting in an inverse head and shoulders, right? And an inverse head and shoulders, they are notoriously bullish, right? And I think the only thing that we're missing with this inverse head and shoulders is really another move to retest the resistance line, right? So if we do get something like this that happens over the next couple of hours or over the next few days where we go up from our lower level right here, then that could be a good sign. But there's no guarantee that this inverse head and shoulders will play out to its measured move from a technical analysis perspective, right? So we really just have to be realistic and just adjust to what's going on in the market. And what's going on in the market right now is that the bears have really maintained control, but there are reasons for that, and that's what we're going to hop into next. So there's a lot of concern going on in the markets right now, and that's mainly due to the fear and concerns of the new COVID Delta variant, right? The Dow Jones today, it dropped over 500 points this morning alone. I think currently right now, while I'm making this video, the Dow Jones is down more than 800 points, if I believe, right? So there's major concerns about this new Delta variant that's slowly creeping up. And, health officials, they expect to see a second surge in COVID sometime in September, right? And I mean, that kind of makes sense because what's happening in September? We have people going back to school and we have people going back to work, right? We have larger gatherings. And, in addition to that, we have countries like the UK who are, acting against the advice of public health experts, right? So as you can see right here, they are fully opening up their economy, right? Let's see right here, fully reopen this economy in a move it has dubbed Freedom Day. Um, Again, this is just purely my opinion. I don't think that this was the smartest thing to do, especially since this new variant is stronger than the previous ones. The fact that we don't have this new variant fully under control yet, and we have countries like the UK fully opening itself and its economy, I don't think that this is good for any financial markets, right? Because as we've seen, COVID is sort of like the X factor for the global economy, right? No financial market has shown to be or has proven to be immune to the impacts that COVID has, right? And even in March, when we had the initial surge of COVID, everything went downhill, everything tanked. People were selling off left and right, right? Nothing was immune to this global pandemic, hence the name, a global pandemic. So, if we do have a second surge around September when school starts again, then history will repeat itself, right? Nothing is immune to this. So I think that we could possibly see another huge sell-off like we saw back in March in every financial market, including crypto. And we're kind of seeing that right now. You can tune into various financial media outlets like CNBC or Bloomberg, or you can go to Yahoo Finance, and you can literally see, guys, like every sector is in the red. And it's all due to the growing fears of the widespread of this new COVID Delta variant. So um, I would definitely take advantage of this. It's not the best news, but this is the prime time to really strategize about what you want to invest in next, and when you want to make those investment decisions, because essentially everything is going on sale. For those who were buying the dips back in March, then you should very well still be in profit. This is sort of like a second opportunity, right? Because we know that the global environment is not going to allow itself to suffer, at least for an extended period amount of time, right? We have the technological resources available. We have, some of the smartest people in the world working on bringing all of the global economies back to a thriving environment and, a sustainable state. But it just takes time. So, with that time, you being a public or a retail investor, you should be using that to really strategize and plan when you want to make these investment decisions, and what you're investing in. I'm still all in on AMP, and I definitely plan on purchasing AMP on these anticipated dips. And of course, I have some money stored on the side, USDC, just sort of waiting for things to play out. So um, yeah, that's a macro perspective. What's going on, and where these global and macro fears are sort of stemming from. But in other news, U.S. regulators, they are meeting today. We all know that. But the main topic of discussion is cooperation with stablecoins, right? So this is something that the SEC is really interested in doing, but we all know that the word cooperation is sort of used very loosely. So, as we can see here, we have a statement or sort of a summary from Federal Chairman Jerome Powell, who says that the market value of stablecoins backed by the U.S. dollar has increased significantly in recent months, exceeding over $100 billion in May. Tether is the largest and has come under fire from authorities from not always having the support it claims to have. So the Federal Reserve is now investigating the digital payment landscape to see if it could use central bank digital currencies, CBDC. And also, this is like the highlight of this. According to Powell, one of the most compelling arguments for a CBDC is that it can minimize the need for multiple stablecoins or currencies. Nonetheless, he has also indicated that the Fed is not confident that it would take that route. So, they are planning to, minimize the need for multiple stablecoins. If you really interpret that, what they're really saying is that they want CBDCs to take over the stablecoin space. They don't want the existing stablecoins to be sort of in circulation. And they ultimately plan to replace stablecoins, right? Especially the need for a whole bunch of them. So I thought that this was pretty interesting. We'll see how this, impacts the market. But, last week, the EU, Hong Kong, and the US, they also met, again, discussing the role of stablecoins and also cryptocurrencies. But I thought that this was pretty interesting in the article. It said that two commissions continue to discuss the idea of creating some kind of safe harbor for new crypto assets. And the proposal apparently envisioned a period of time for which new crypto assets would not have to comply with security law disclosures. Now, for me, I'm interpreting this in a whole bunch of different ways, but Could this be the catalyst or the policy or the discussion or decision that crypto needs to break out of the current downtrend that we're in right now? Time will tell, but this will be great for crypto, in my opinion. Just classifying crypto as assets that would not have to comply to SEC law disclosures, right? That's ultimately where we're trying to go, and just sort of decoupling and decentralizing from traditional financial laws and structures, right? So I thought that this was pretty interesting, and I'll include a link for this inside of the video description. Last but not least, the B word. This is a highly anticipated conference conducted by the Crypto Council for Innovation, led by ARK Invest, Kathy Woods, Square, Jack Dorsey, and Paradigm. Yeah, we should all know who Paradigm is. This is happening on the 21st. So this week, guys, this week. Should be pretty interesting. We'll see how, it impacts the overall market. And one quick thing that I wanted to end today with is taking a look at the psychology of market cycles. So we all know that we've experienced this huge, massive selling climax already, and we tried to retest it. Just sort of looking at the overall cryptocurrency market, and we went lower, and we tried to retest the previous lower high, and we weren't able to do that. So now we're continuing to move lower. I think that looking at this market cycle chart will help to ease your psychology, to help you understand where we are and also where we are headed. So, if we haven't seen the worst of the worst yet, we know that the worst of the worst is still to come. And, buying during these worst of the worst conditions is ideal, right? You want to buy low and you want to sell high. If you're that type of trader or investor, right? You don't want to buy high and then sell low. That makes zero sense to sell at a loss, right? You're better off holding, weathering through the storm, and then making a solid decision on what you want to do with your investments after we come back to the euphoria stage, right? So I'll include a link for this chart inside of the video description as well. But it's just always a good thing to understand where we are in terms of the market cycles, so that way you can make better investment decisions. So that's all I have for you guys today. Don't forget, if you like this content, like, subscribe, and share with your friends. And this is coming daily, guys. This is coming daily. Until tomorrow, DTA is out.